This conference will now be recorded.
All right, guys, as always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. All right, so welcome to our workshop on tape reading. Those of you that don't know me, my name is Rich Lepis. I am the founder and CEO of Ahead of the Charts Trading. And essentially everything we do is tape reading. So let me just give you a little bit of a background of exactly where this came from. So every single Tuesday at this exact time at 12:30 Eastern time, what we do is what's called Traders Exchange. Okay, we have a chat room, and basically what any of my students can do is they can ask any question they want. So essentially for an hour, what we do is we do a workshop every single week that just goes into depth into the questions that the traders have. But last week we got a really interesting question. It was from one of our students named Andy. And Andy really wanted to go further into tape reading. So it's funny because those of my students that have been in my classes and everything else, they'll tell you tape reading is not an hour thing. Okay, one thing I can promise you out of this workshop is I'm not going to sell you anything. At the end, I am going to spend 30 seconds. I'm going to give you a link and a trial thing, but that's pretty much the entire sales part that's going to be in this. It's literally going to be a full hour of content. But what we're going to do is we're going to spend a little bit of time in the beginning on the basics of what tape reading is, and really basically, at the end of the day, what my goal for this workshop is to just kind of give you a visual, a picture of exactly what that is. All right, so first question I have for you guys is, who here has never heard of time and sales? Is everybody familiar with what time and sales is? Because if you're not, this is going to be a little bit rough for you. Oh, Andrew. Anybody in here not familiar with what time and sales are? All right, so
I'm not.
Looks like I need to mute somebody. There we go. Okay, so first time here, same, okay. I'm sure most people. Okay, so let's talk about what time and sales is. So if you look right here over on this is my platform, the actual platform that I use to look at everything that I'm going to trade for the day. All right, so if you look over here, these are what is called time and sales. So the easiest way to show you is there's 5 parts that come into time and sales. Okay, first you have above the ask, but let's start with ask and bid. So what the ask is sell orders. All right, if you look over here on what's called the matrix on TradeStation, you'll see that there's orders over here that are on the right hand side. Okay, that's what's called the ask. What they are their limit sell orders. The next thing that we have is the bid side. Okay, so what the bid is limit buy orders. What a lot of people don't understand about time and sales, though, is it's who initiates the actual execution. So let's say I go out on the ask and I have a 10,000 share sell order. If a buyer comes, okay, and buys those 10,000 sell shares from me, what's going to end up happening is it's going to show up in green. Okay, because it's at the ask. So even though a sell order is being executed, what's going to end up happening is the buyer comes, buys it from them. So when we get hit on the ask, we see it as green. Now it's the exact opposite for the actual bid itself. So the bid, okay, is just a limit buy order. It's like if you went out there, let's say right now the price is at 144.04. Okay, if you wanted to put an order out at any other point, okay, in this case, let's say 140. Whatever. I mean, this is jumping around a little bit. I'm going to use ZM in a second for one thing you guys are going to know. I hate PowerPoints, so one thing I would definitely suggest for you is to get a pad and a pen, or however you take your notes, and take lots of notes, because I'm going to be using literally the live market as we're doing this. But the bid is just the same thing. Okay, bid is limit buy orders, but in order for the bid to get executed, a seller has to sell to the buyer. So because the seller initiated the execution, it's going to turn up in red. Okay, then we have what's called above the ask. Okay, above the ask is going to show up in my time and sales as yellow. Basically what that means is that someone wanted to pay a higher price to get into the stock. And when I say want, as we all know with traders, sometimes we make some fat-fingered mistakes that we do. Okay, so it's not always the case, but essentially they're buying higher than what the actual ask was. Below the bid is the exact opposite. They are selling, okay, below what the actual bid price is. So if the bid price is 5, but you sell at 4.99, well, you took a cent loss on what you could have had at 5. So it's going to show up in purple. And then we have what's called between the bid and ask. It's going to show up as these white prints right here, okay, with black background. And basically what that means is that if the spread, let's say it's $5 on the bid and it's $5.05 on the ask, if I was executed at $5.03, what's going to end up happening? It's going to be between. So the things that you need to know about this, okay, what does green mean? Okay, if we break it down as simple as it could possibly, green means ask, green means buying, perfect. What does red mean? Selling, absolutely. We're going to completely ignore above the ask and below the bid. I want you to understand something, okay? Everything I'm going to teach you within this next hour essentially is going to show you that market makers can do whatever the hell they want and they control what the market does. So somebody that can execute, okay, let's say 500,000 shares all at once, is the color going to matter? No. And the best market makers in the world, they're not going to pay more or buy or sell at lower prices or higher prices than they need to. So the yellow and purple prints you literally are going to ignore. You take them completely out. Now, what does between the bid and ask mean? How do we take those? Because obviously, you know, buying means up, selling means down. Okay, where do we go from there? And when I say that, guys, make sure you make a little note right now that that is not even close to true. Buying does not mean up and selling does not mean down. Overall, it will, but we'll get there once we. But when we see between the bid and ask, guys, can we put a direction to it? Yeah, there we go. We ignore it. Completely ignore it because these prints themselves aren't telling us direction. They're not telling us someone was buying. They're not telling us someone was selling. All they're telling us is something was executed there. Now, if something isn't definitive, and this is going to be a big point that we talk about throughout this entire hour, is that if something is not definitive, can we use it for a trade? I don't care who you are, but if you don't have any idea of up or down or buy or sell, can we know? No, we cannot. All right, now once you get really good at this, there's certain ways, but that's a whole more advanced workshop that we come into. But overall, so really guys, what are the two colors? The only two colors we actually need to pay attention to. Only two colors, red and green. Pretty much that's what it's going to come down to. All right, so now let's talk about print personality, because before we could actually get into how to tape read, we have to understand that does everything we see on time and sales, before I even get into that actually, so you'll notice I have two time and sales. Okay, I have one that shows every single order, and that's what time and sales is. It's showing you every single buy and sell order as it's happening. Okay, does anyone know the date the market opened? There's been one method since the date the market opened that has been continuously used throughout the history of trading. So really quick, you said market makers, can you give a brief explanation of what that is for the others? So really quick, you said the market maker. Okay, market maker. Market maker is big money, smart money. JP Morgan Chase, Goldman Sachs, the people that control what happens within the market. Okay, versus retail, as Liz just said, which is retail is people that are trading 100 shares here, 100 shares there. They're at their kitchen table or they can be anywhere, but they're not controlling what's actually happening. Thanks for that, Oscar. Okay, it's a receipt of purchase. That's it. It's just the receipt after it happens. And the receipt with red or green is going to show you whether there was a buyer that did it or whether there was a seller that did it. But you're going to notice, so this one on the right-hand side shows everything, every single order that's going off. What do you guys notice about this over on the left-hand side? What do we notice about the left-hand side? That's it. It's filtered. All it is showing me every order that's over 1,000 shares. So let's think about it for a second. So one thing you're going to understand is in order to be a tape reader, these aren't numbers. Okay, what they are is a picture behind who the other person on the other side of the computer actually is. And it's less frequent, Blair, because of why? Why is it less frequent that we see orders over 1,000 compared to orders that are, you know, right here, you guys could see everything's divided by 100. So when this says 10, it's actually 1,000. When this says 0, it's under 100 shares and so on and so forth. Yes, but that's it. Okay, there's less big money that's out there that actually knows how to trade. Most people out there aren't trading over 1,000 shares. So if I see someone buy 400 shares, anyone feel that they would put their money with that person because they traded 400 shares? Anyone want to follow that guy or girl or whatever, whoever it is? No, of course not. So that's why we come over here and we use this filter, because it just helps you kind of see the picture a little bit better. Unless it's in Berkshire. Well, the problem with that is that if it's in Berkshire, I'm going to promise you they're not trading 400 shares of anything ever. So no matter what, it's not going to be part of that. And that's really what you have to take out of that. Okay, you have to start tape reading. Okay, the fundamental understanding of tape reading is that smart money is never wrong. Now, can smart money be wrong? They can. But guess what happens when smart money is wrong? What happens when smart money is wrong? Gone. Completely fired. They no longer are allowed to trade because they're fired from what they're doing. So guys, how often is smart money wrong? Okay, we call them lose your job prints sometimes, and we'll get into that. But yeah, this is going to happen. It is not very, the percentages. Remember, everything about trading is percentages. Is there any such thing as 100% trade? Is there any such thing as 100%? No, it's impossible. There's some close 99s, but there's no such thing, because anything can happen within the market. But we have to understand that smart money is not going to be wrong, because then they're not there anymore. Okay, and the people that are trading that big of shares, they have to be right or they lose their job. All right, so let's get into print personality. Before I can actually teach you some fundamentals on tape reading, and I want you to remember one thing. So what we're going to do is I'm going to explain to you exactly in a nutshell how tape reading works, and then I have 4 bullet points from the question that one of my students asked me. 4 different questions that they asked me, and we're going to take that information that we go over and we're going to go from there. Okay, so print personality. Anyone have any idea what that means? Print personality. And if you guys are going to, anyone that doesn't know me, you're going to realize I ask a lot of questions. You know what, Blair, I like that a lot. It's like the signature of a trader, and it is, but it's not the signature of a trader. It's how we interpret the signature of that stock. So it doesn't need to be one specific person, because guess what? Sometimes there'll be 5 to 10, 15 market makers in a really hot stock that's going on out there. So it's not necessarily for a specific trader, but the personality of that stock. Now, I always use the same example, and I've been doing this for since I've started teaching. Okay, but I go to Siri. Okay, because Siri is always there. Now, when we look at this right here, when we look at 528, okay, see this many prints over 1,000. We're going to get to controlling prints in a minute, but you see how many prints over 1,000? Does this mean anything within the stock? What is Siri's print personality? Well, hell no, it doesn't, because it's, first of all, we could see, okay, if you look over here, today it's moved 15 cents on average, okay, it moves 23 cents. And that's high for Siri. I haven't looked at it in a long time. Yes, so it's going to take a huge amount to actually move the price anywhere. Well, of course, it's a quant stock, but, it helps my example, Rich, so. But you can see, it takes more love. It takes a lot of love to move this stock. Okay, but if I come over right now to ZM, okay, so picture this, keep this picture in your mind right here, this burst, and if you look, guys, it's almost a lot of it's at the same time frame, 12:42:32. See how it's all a big burst, and obviously bursts are something else. I can only do so much within an hour, so I want to give you as much as you can to help your trading for when you leave the end of this. Okay, so 528, we can see that. Now I'm going to go to ZM right now, because I'm going to use this as an example in a second. What if we saw those same amount of prints in ZM? I got a free series stock. Yeah, well, if we saw that, guys, oh my Lord, the size of the position would just be crazy. Because if we look at print personality, and when you look at print personality, should you be looking at greater than 1,000 or less than 1,000? So should you be looking at the print personality greater than 1,000 or less? Greater. because those are the real traders that are out there. Now, don't get me wrong, there's certain stocks, guys, that there's just not enough orders out there to actually be able to execute big amounts of shares. So there are some times you will find a stock where most of the market makers are actually trading in less than 1,000. Guys, how often does that happen? See, you're going to learn after we're done with this workshop. I don't care who invests. Guys, do I read the news? Any of my students in here, do I ever read the news? Ever? Nope, not once. Don't care. The reason I don't read it is because, not because I'm lazy, it's because it doesn't help me. Because if something's going to happen, guys, where are we going to see it? If somebody thinks the stock's going up $10, what are they going to do? What are they going to do? It's this simple. And now, obviously, it's that. Of course, we're going to see the prints for it. Okay, I mean, LK, I'm not even going to bring up, but guys, we in the chat room, we talked about LK for how long? I kept saying the puzzle doesn't make sense. The puzzle doesn't make sense. And guess what? We woke up and it was $5. Perfect. Okay, but we're going to see this stuff happen before it actually happens. And that's one of the greatest points of the tape. Okay, and I'm back to my question that I asked earlier. When did the market actually open up? And it technically was, I think it was 20 different banks or something like that, but it was May 17th, 1792. And this has never changed since that day. Guys, why can't it ever change? Why is tape reading always going to be a method that never changes? Why? You can't fake orders. It's just, it is what it is. If you want to buy, you have to report it. Otherwise, you go to jail. Now, don't get me wrong. Market makers can report up to 24 hours after but those are all going to be bigger prints, and you don't even need that coming in. And I'm going to show you guys that why. So print personality. So what's the print personality in ZM? I want to do a few examples just so you guys really get this drilled into your head. What's the print personality in ZM? Does it print a lot of bigger shares in it? Okay, so dark pools. I knew that question was going to come up. You know what a dark pool is? So everyone thinks these dark pools are these nasty things that have any effect on anything that happens. All a dark pool is that there's certain accounts that you can have, and a Goldman Sachs can do, obviously, any of the big brokerages can do it. All that means is that they're trading, okay, off the exchange. They're making a deal off the exchange, and then it's reported later from there. You still see it. The dark pools come up, but guess what? Will the market ever react to something that's happening that no one can see? I remember watching Mr. Adams reading the tape all the time in the 1960s version of the Addams Family. Yeah. That's actually a funny story, but I want to give you guys all content. I'm not going to get into but yeah, they can't affect anything, guys. If it happens, you got to think about this, okay? So let's say there's 3 of us in a room. Okay, I make one person leave, me and that other person make a transaction. Okay, well, actually, better example, 4 people. So 2 people have to leave the room, me and that one person make a transaction, the other 2 people don't know. Okay, are they going to react or affect anything that's going on until they see it? No. So when the dark pool gets reported, guess what? We all see it. So no matter what, it's just the prints. Now, yes, do they have an advantage by being able to do that? Of course they do. Well, that's why they're Goldman Sachs, Godfather of Wall Street, and so on and so forth. So things like that, they don't matter. They do not matter. Guess what? The game is fixed. Anyone that tells you it's not, okay, it is. But there's one thing they can't fix is buying and selling. When it happens, we see it. Their backroom swaps won't affect the stock price, happens after. Well, it doesn't happen after hours for the most part, but it will be reported whether after hours or morning or something like that, but absolutely. All right, this is making sense to everybody? Any questions yet? So print personality is everything in order to understand how to tape read. Okay, let's use another example. Let's talk about Roku for a second. What's Roku's print personality? Thick or thin? Thick or thin? Thin. Very simple. Look, thin. Okay, I'm going to give you a number right now. What is the minimum number to even be thought about to be thick? There's a number. What's the minimum number that it could ever be to be thick? If it doesn't have this number, not 10, 4. Has to have at least 4 prints within it. Okay, and when I say 4 prints, that doesn't mean once, that means consistently, because there's something that's called difficulty of trade. Okay, let's go back to ZM for a second. Okay, and make sure you guys have notes being taken down. But difficulty of trade, this is a big deal. Okay, right now, guys, you can see what's being traded here. So if we get 4 prints that come in a burst, isn't that a huge amount? And based off what we've seen so far and how thin the actual orders are out here, what that's telling us is that the difficulty of trade in order to do that is very, very hard. So it actually even adds more weight to the print. Guys, I could talk about this for literally for a month, probably longer than that, but I want to go kind of stay focused and get to the things that you need so you can come out of this and actually have something to start looking at. Okay, so print personality is huge. Now, a question for you. Can we understand what to look for if we do not know print personality? Can we understand? No, it's impossible. Because we go back to Siri and we look at, those 529 prints or whatever the hell they were, all right, that looks huge. But if the print personality, that says it's nothing. It's not going to move anywhere. It's not going to do anything. So without knowing that print personality, we actually don't know what to look for. It is just, and make sure you understand this focus is that it is just as important to understand what to look for as it is to not look for. Okay, is there any way that we can 100% understand every print that goes on? Is it possible we can understand every print that happens? Hell no. If that was the case, guys, I'd never be a trader. I probably would have quit. No, there's only certain things, and we're going to talk about why 90% of the time we're going to be watching a time and sales in a little bit. I just want to make sure that everyone that's new here kind of starts to understand what tape reading actually is. It's the keys to the kingdom. It's telling you Goldman Sachs is saying, I'm doing this. Now, we can't see that it's Goldman Sachs, but guys, does it matter? If someone's buying $100 million worth of something, does it matter who the hell it is? No, I don't care. It can be whatever bank. There's no prejudice behind who's doing it. We know that big money, a lot of the time, 90% of the time, is going to translate into smart money. All right, so we have to understand what are we looking for versus what is noise. Because if we get caught up in noise, guys, are we ever going to know what a stock's going to do? Ever? Nope, not going to happen. So make sure that we're understanding that. So now I want to talk to you guys about controlling prints. Okay, controlling prints. And thank you, Donna. Let's look at SPCE because this just happened. So controlling prints are the number one reason or number one thing we need within a trade. And I have 2 examples that I'm going to show you guys in a second. Now, I want you, before we can talk about controlling prints, I need you to understand what the psychology behind how market makers actually trade. Because, guys, number one thing about reading the tape is what? Psychology. These numbers mean nothing, unless you know what the person behind them is doing. So having a bunch of ass prints at 20 means the stock should go up. No, it doesn't. Excuse me. Sorry, it just went down the wrong pipe. All right, but those numbers mean nothing. It's what is the game plan. Now, how many of you guys have seen a stock just go straight up? Or how many of you have seen a stock just go straight down? Whole day. Up, straight down, straight up. How many of you guys have seen that? Just a straight trend. Yeah, it doesn't happen. Okay, it literally can't happen. The problem with a stock that's going straight up is, can a market maker that's trying to get 100,000 shares of something actually get 100,000 shares at a good price? Is it possible? No. That's why we see pull-ups and pullbacks. So perfect example is right here. So to understand what a market maker does, in order to get shares, okay, does anyone know what the percentage of people that trade fail are? Anyone have any idea what that is? 99 might be a little bit high, but last I heard it was about 90%, somewhere in that area, or it's not a good percentage. But it's because they don't know what the hell they're doing. They don't understand what the psychology behind what's happening is. So look at these right here. These are what are called controlling prints. Okay, and if I go back to the rest, guys, let's look at all the other prints. Okay, forget those 20, but now let's look at the actual stock itself. Okay, what is the print personality here? What do we see as the print personality here? What do we see? Oh, remember, 4, a burst of 4 is the minimum to be thick. Do we have lots of bursts of 4 here anywhere? When I say bursts of 4, I mean it's thin. It's very, very thin. You're not seeing, and a burst, guys, a burst is one execution at once. It doesn't mean that, you could have 70 executions happen 10 seconds later from each other. That doesn't mean that's one execution coming in. We call it the pulse. Okay, the actual pulse of time and sales. So if you look at the regular one right now, you'll be able to see. Okay, see how right here at 160, it just burst out, and okay, 157 to 156. See how this just pops out like that right here at 56? That's the pulse. So that means one execution coming in. All right, but we see this beautiful buying at 20. I mean, absolutely phenomenal. Way, way more than what we've seen anywhere else. So let's ask ourselves, if they showed us this, because you got to think about a trader. Is a trader, do they want to show us what they're doing? Do they want to show us what they're doing? No, because if they do show us what they're doing, what's going to happen? They're going to have to compete with us for shares. No. So in order for this person to actually build let's call it a 1 million share position, how much of retail money do they need to take? How much of retail money do they need to take? Because remember, no one can force you to sell shares. The only thing that they can do is make a chart move because 99.99999% of people will have a chart on their actual screen. Okay, and that's because everyone has a chart. So guess what 99.9999% of people look at is the actual chart itself. So it goes up like this, people buy. That's why every trader here, okay, and one of you can tell me if I'm wrong, every trader here has said, I got in, it's like the market maker is watching me. The second I get in, the stock does the opposite way. Anyone ever have that happen to them before? Yeah, but it's because they're showing you that's exactly what's going on. So when we get these ask prints, these are what's called controlling prints. Controlling prints show us there's a dominant market maker within the stock. Does it matter if 2 people did this or 1 person did it or 5 people did it? When we get a burst like this, does it matter? No, don't care. Because in this case, you could see all the same time frame. It was more than likely 1 execution. Okay, more than likely 2 executions because this weird guy that popped up in between. But either way, same game plan, same everything. Guess what? Someone is very interested at 20. So if they're very interested at 20 and they showed us that, would it make sense for them to just run the stock up? Stocks don't go straight up and down because it's just a mix of accumulation and distribution between big positions. So they hit this at the 20. Guess what happens when you get big ask controlling prints? Ask means buy, which means the stock needs to go up, but guess what happens afterwards? Right after those prints, for the most part, what's going to happen? Yeah, they're going to pull it back because when 90% of people, after they got in above that 20, because they think it's a safe support level, and they love exactly what they saw coming here. It's going to push. We're going to run a 98. Life's going to be great. And then what do? Boom, smashed every one of those people that came into the stock. Every one of those people, if they still held, they are now losing. So guess what's happening? Okay, when they start selling into this thing, okay, and they start selling the shares, guess who's picking them up? Okay, when we see this at 20, and Davis just said iceberg analogy, it's literally an iceberg. It's only the tip. So when we see a huge amount of prints come in, it's giving us a little indication of how big their position is actually going to be. So how big of a position do we think that they're going to be setting in SPCE right now? A huge position? Yeah, it's gigantic. It's going to be gigantic. And the bigger the position's going to be, what does that tell us for a pullback? The bigger, the more prints, the more difficulty of trade compared to the print personality, it's going to pull back further. Guys, was this not a great short? And I'm not going to go over triggers today. And I'm going to tell you something right now. Triggers are one of the most important things that you're going to need to understand in order when to take a trade. That's time frame. We'll do that another day. Okay. But you have to understand this was a perfect trigger that came into here. And look what happened because of these prints. Overall, guys, where's the stock going? Overall, where's the stock going? Up. But would this, because that many prints, guys, would this have been a great short to take once we got that trigger to break underneath 20? Hell yes, it would have. Because they need to build more shares. And guess what? They need to build them. And it's the same step ladder analogy I use all the time. Okay. When the stock comes down here, there's only so many people that are going to sell at 20. Then there's only so many people that are going to sell at 1950. And then so they're going to keep bringing it down until they get all the shares from the people that they want to. Yeah, Tracy, honestly, I'm trying, otherwise we're going to be here for like 4 hours. I'm trying to keep everything into an hour, but Tracy's 100%, 20 is a big psychological level. Okay, there's a million, like, I just want you guys to understand, I'm going to give you as much content as I possibly can. There's a billion things. Tape reading is not an easy thing. It's not, you guys will notice, do I have any indicators on my chart? These are the exact charts I trade off of. Well, I mean, I execute on a different computer, but this is exact, there's none, right? Because I don't need them. Okay, I have supports and resistances, and I have big prints. Okay, so you can see like here, 77,000 shares were traded at 9:30 on 4.9. That's the only two things that I use within my chart because I don't need anything else because I can base all my moves based off those prints. Okay, so let's just break it down real quick for you guys' notes. Okay, we have a huge amount of ask prints. What does that mean it's going to happen? Huge amount of ask prints. What does it mean it's going to happen? Pull back. Pull back, pull back. Okay, huge amount of bid prints. What typically happens? Pull up. That's simple because they have to build their position. If they show us the tip of the iceberg, we now know there's a bigger iceberg. Now I'm going to have to switch over to this screen because the prints are disappeared if I try to pull it up again here. But I want you to look at something here. Look at ZM. Okay, look at ZM's print personality. Okay, I'm going to show you guys all right now. Okay, look at its print personality. Okay, would we call this thick or thin? And this should not be a hard answer. Disgustingly thin. There's nothing there. But then 144, huge amount of controlling prints. Okay, it pushes from there to 145. Okay, 145 being a big psychological level. Now, keep in mind, guys, sometimes things might act as an exception first, but they all come back to reality. That means if 144 gets those ask prints and it pushes up to 148, I'm going to be expecting a pullback under 144. So we know we come up to 145, a psychological level, and psychological levels are easy, guys. You're talking about 100, 25. Basically, if something has a 5 or a 0, it's going to be a psychological number. Sometimes, a 50, so like 250, 1250, 1750 in that nature. Once again, I'm trying to get as much in as I possibly can to make sure that you guys all walk away from this with a ton of content. But we can see it's disgusting. So now everyone keep in your head these prints. And once again, I like to use things that happen today. I'm not a PowerPoint guy. We have another workshop we're going to be doing on Wednesday about psychology in times like this, and that will be free for everyone too. But you're going to notice I don't like PowerPoints. That's simple. But so keep in your mind these 144 prints, and then these 145. So stock pushes, and I'm going to get back to our bigger screen. All right, so we go back to ZM. Stock pushes. Okay, one from those 144 prints right here. Goes up to 145. What do we get? Where's the stock now, guys? Did it pull back underneath 144? No question, because that was a huge amount. So that's what controlling prints do. And if it's the bid, it's the same thing. It would just go up instead of, in this case, going back down. But this is how controlling prints are the number one thing that we need to understand in order to even think about taking a trade. Because can we take a trade before we have controlling prints? Ever to have a high percentage or high statistics? Nope, can't happen. Because if you're not following controlling prints as the dominant market maker, Who are you following? You're taking a guess. You're literally just trying to follow something that doesn't exist there. All right, so these are the things that you have, and this is as simple as I can make it, okay? Huge amount of ask prints that are over what the print personality is, means pullback. Huge amount of bid prints, over the print personality means pull up. Okay. Now, obviously, there's way more into this. I don't want anyone thinking that I'm just going to go out there and be able to be a phenomenal tape reader based off of that. So does tape reading work for dark pool prints that are massive but get reported hours afterwards? Okay, so anything over 100,000 changes everything. We're not going to get into that during this workshop, but anything that's 100,000 or over, like for instance, right here, 108. So if you see this line on my screen, so that means that at 141.07, someone bought and or sold 187,664 prints in one print. That's going to be longer term. It's not going to be for what we're doing here. But once again, this is all stuff we talk about in our Traders Exchange and go further. I'm just trying to get as much out as possible within the hour. All right, so control, the stocks go straight up and out, control, okay. So why do controlling prints need to be at major levels? Major levels, guys, dollars and 50s, this simple. So 145, 144.50, 144, 144.50, every single stock. Why do they have to be, in order to be controlling prints, have to be at major levels? And Davis, liquidity is the 100% correct answer, but I'm a simple guy. It's a little bit harder, liquidity could mean a lot of things. Yeah, that's the most people are going to be buying and selling at those levels. Everybody mentally, so psychology is a huge part of tape reading. Okay, all my students will tell you I don't read trading books. I have no interest in them. What I read is psychology books, because psychology helps me understand who's behind the other side of that computer. Someone that goes out in Siri and buys 1 million shares, that doesn't mean much to me because I can read behind the actual person itself. Okay, but when you see stuff like this where it's very thin and then it comes out like that. Can I recommend a book? I could recommend 1 million books. I'm gonna want to get through this, guys, and then I'll at the end of this, I'll leave some time open for questions. I do have a meeting at 1:45, but screw them. If we need to go further, we can go further. All right. I lost my train of thought. So I'm out. Controlling prints need major levels. Okay, it's just because, as David said, the liquidity. Okay, so the actual liquidity itself, people love whole numbers. They think that there's some type of, of support there or whatever it is. That's just how the market works. Not a class that's worth on taking. Just take my word for it. It happens day in, day out since 1792. Okay, so amount of prints in the controlling prints, short-term versus long-term on personality. Okay, when we see ZM and we saw those prints at 144 and 145, guys, it was going to be a huge pullback, wasn't it? Huge pullback because it was that many. The difficulty of trade was actually there. So then at that point, we can actually go out there and we can short it. Even though it's going against the prints, the personality showed us it needed to build that much. But if there were only 4 prints at 144, is the move down, the pullback down, going to be as much? And Ravi, I'm going to get to exactly your question in 2 seconds. I'm just trying, once again, trying to get everything out as quickly as possible because we only have 15 minutes left. This stuff just flies. So you know what? I'll go into this before the question's answered. So a controlling print is a set of large orders artificially inflate the price. No, there's no such thing as, see, that's the thing, artificially. Guys, can we lie about buying and selling? You cannot artificially inflate a price. Now, that's actually kind of wrong. So technically, you can artificially inflate a price if you buy, let's say I buy 100 million of something. I can also sell, I could buy 100, make it show buying 100 million. I could be selling 200 million. So technically, I guess that could happen. It's not something you're going to see very often, but artificially inflate the price, in this case, the ask prints momentarily, and the purpose of this, so the market can buy back the rest of the desired large orders at a lower price once artificial inflation price. Yeah, well, no, that's pretty much it. Ravi, but it's not the artificial price, okay? It's what they're doing is they're getting people interested into it, and they're getting people to buy. Guys, what makes retail buy? 90% of the reason that retail buys is what? That's it, chart movement. Not an uptrend, it doesn't even have to be an uptrend. Chart movement. You could have a stock that's going sideways for the entire day. The second it breaks out, people are going to hit buy and they're going to chase. 90% of people fail. Hence, the psychology that goes behind it. So what they do, Robbie, is they want to bring, in the case of the ask prints, what they want to do is they want to get people to buy some of it. And then those buyers, then they're going to bring it all the way back down to pull back. So then they can now take the shares from those people. All those people lose and then release it. Okay, perfect. The best way to think about this. How many of you guys have taken a trade? Okay, you get shaken out and then it does exactly what you thought it was going to do. Ever happen to somebody? Of course it has, because it's setting you up for it. That's literally exactly what this does. If you would have known, if you're following an indicator or some whatever methodology, I don't care what your methodology is. Okay, I'm going to be tape reading from now till forever. Some of the people here have been doing it for 10 years. Okay, so at the end of the day, if you would have actually had the prints up and understood how to read them, you would have seen before it happened. Okay, indicators are lagging. The indicators are lagging. It's that simple. Okay, the prints happen before the move happens because they have to set themselves up. That's why it puts you, and I know my company is called ahead of the charts. It's for that reason, because I know what's going to happen before the chart actually does it. My students will tell you guys, okay, when we do our classes, do we draw the chart, okay, before it's going to happen in the morning? Do we actually draw the chart of what's going to happen before it happens? Because guess what? The prints told us exactly what it's going to move, what it's going to happen. So I can draw a chart before the chart actually happens based off these prints. You have lagging indicators and you have prints which are precursors to what's actually going to happen. All right, so back to ZM, so controlling prints. Okay, so the amount. Okay, if there's an absurd amount, you know it's going to be a big pullback, you can actually play that other side because you know they're going to be building for a while. Now, if it's something normal, shorter term, 4 is the number. Most of the time, it's going to be shorter term prints. Okay, you know how you can tell? And you guys, I'm going to blow your mind real quick with the easiest thing you've ever seen in your life. How much does ZM, if somebody comes in with 4 ask prints right now, over 1,000, how much do they have to make? How much do they have to make? $1. Why $1? How do you guys all know that? So simple. Okay, your platform is see, it's not that it's a larger stock. I mean, that's a good answer too, but it's not the right answer. Okay, so on the minute chart, if you go out a full day, take the pre-market and the full day out there, see these numbers, the way the increments that come on there, this guy needs to make $1 on every single one of them. So these increments alone tell us they need to make $1. So we know, 3 or 4 prints is going to be short term. We know if we have 10, 15 prints, it's going to be big, it's going to be a lot longer term. The longer term the prints show you the stock is going to be, what does that tell us? The longer term the prints are, tells us the more they have to make and the bigger they have to pull it back. Because I can't force anyone to sell shares. How can what's the only way I can force someone to sell me shares? Move the chart. If I start bringing the chart down, I can bring it down on nothing. Right now, guys, see how thin the orders are out? If these were my orders, all I have to do is pull them. The stock goes to 143 instantly. It's so easy. So they can literally make a chart just get destroyed without even having to sell anything into it. And these are the things that we have to understand. All right, so now I want to go into this. Guys, honestly, this is going to be a lot longer than I thought it was. I'm trying to go fast because I know people have things to do, but if not, you'll have the recording. All right, so one of the things that Andy asked, and I really, this stood out to me because I loved the question. Spending 90% of the time looking at time and sales. All right, so I spend 90% of my time looking at time and sales. Guys, after I look at this chart in ZM and I understand where key points are, do I need to look at it ever again? Do I ever need to look at this again? That's it. I don't need to look at it anymore. No, so charts are, yes, Andrew, you're right. They are for retail, but we need them too. They make our life way, way easier. But once we see the certain spots that we need to pay attention to, that's in our head. Write it down. You actually don't even need to look at the chart anymore coming into it. So what 90% of the time, what I do is spend it when I'm looking at time and sales, because once I know what's going to happen, all I do is I sit here and I look right at time and sales. And all I'm looking for, okay, I go back to what the print personality is. Okay, so what's the print personality? Now, one thing I want you guys to understand about print personality, is it going to be different from 9:35 than it is at 11? And 11, is it going to be different at 2? And 2 be different than 3:30? It absolutely is. So you need the information at that moment. You can't keep the same print personality from 9:30 to 11 that you can once you go into the rest of the day, because it's going to change. So the easiest way to look at the print personality is just pull up your time and sales, okay, and just see what it says right here. Right now, guys, in ZM, 2 prints, is that a lot? 2 prints within a burst over 1,000, is that going to be a lot? No question. Look at it. Well, we don't, right now, you can't see one burst of 2. So for right now, it's going to be big. So if you have to constantly change what the print personality is going to be as time goes on, because if you still have the same print personality from here when the market's still open and it was at its highest volume, well, guess what? You're going to be, you're going to see things and it's not going to mean anything. So make sure you're constantly, looking at what the print personality is going to be. Okay. But the numbers, I'm looking at the story. Okay, once we get to basically, let's call it 10 o'clock. So 10 o'clock in the AM. Okay, and everything's Eastern time. So anytime I say a time, it's always going to be Eastern time. But 10 a.m. we come in, we see the stock and we start to see, what's coming in there. Okay, do I, at that point, should I know what the personality of the stock is going to be? So what happens is when things get really slow, I'm always watching time and sales, but I'm looking for things that stand out. Okay, and this is something that we're going to be doing in our next classes, and we're going to do a lot with that comes into tape reading, but this is kind of like the intro to it. But what I want you to understand is that the personality itself is telling me what to look for, because from right now, okay, let's go from 12:52, right now it's 123, from 12:52 or so on. Okay, is there anything that stands out to anybody here? But if TD Ameritrade, I'm pretty sure it's only at, excuse me, I'm pretty sure it's only ask and bid, Blair. No, nothing stands out. So I'm still, if I'm watching CM, let's say I have a great story. Okay, let's just call it this. Well, we do have a great story. 144 above 145. What I'm going to do is first I'm looking at volume. With this volume, guys, are we pushing past 145? It's not the Rona. My voice gets dry. I don't stop talking, if you know me. No, there's nothing there. There's no volume. There's no chance. There's nothing to look at. So the reason I'm sitting here staring is I want to see something that pops out. Something that's like, oh, shit, I wouldn't have done that. Because you got to understand, when there's no trading going on and then someone comes out of nowhere, and this is something that you have to understand about prints, is that someone comes out of nowhere and gives us, let's say, 7 ask prints that come in here now at 144 again. Okay, think about the psychology behind it. No one's doing anything, and this guy just comes out of nowhere and does that. What do you think the weight? What's the weight that those prints are going to hold when no one's doing anything and all of a sudden someone does something big? Are those prints something that I should put 10 stars next to, or should I just kind of be like, okay, well, there's prints at 144? And obviously I'm giving you, complete opposite. Yes, 10 stars. Because the psychology behind that is crazy. Okay, I always use this example, and it's the first to the table, and we've all been. The reason I use this because we've all been there before. Okay, anyone ever been at a party before where they're setting up a buffet? Okay, and they have all like their the sternos and everything, and all the foods come out, and they say it's time to eat now. Okay, what happens when they say that? So if the small retail traders aren't significant, why do you have it open? Wouldn't the market makers move only be the important one? Well, so the funny thing about that, and I can't call you toilet man because that's just silly, okay? But the actual retail, okay, Market makers need retail to help them push. There's 2 points, there's 2 stages that a market maker will be into. Number 1, okay, is the fact that they're letting you help them make money, and number 2 is they're taking your money. Guys, do controlling prints move a stock a cent? Will controlling prints move a stock a cent? Nope, doesn't move them a cent. Literally, it's being an order being executed does not move the stock. That's what's called follow through. And it's a great question. It's an absolutely phenomenal question. And that's what we call triggers. Now, this is just on tape. A trigger is what's going to tell you that they're actually releasing the stock to get follow through in it to start it moving. But market makers need retail. They actually, a smaller percent of the time than they're taking money, they're allowing people to make money to help them push their stock up. And that's what a trigger is. Okay, which, that's, a day. And guess what? We talk about it constantly, and it triggers a very easy thing. Basically what it is, it's price action and volume. Okay, but that's, that's a class once again for another day, but absolutely phenomenal question. Okay, that's where we get it, exactly, get in the trigger. So it's not, they don't rush to the food, interestingly enough. What happens, okay, what does everybody do in a room when there's food out there? Everyone looks at each other. Yeah, nobody moves until the first person gets up. And that's exactly what this is. For some weird reason, everyone's there to eat, but no one moves, and they look, and then that first person gets up, boom, the rest of them rush forward. And that's the same thing that happens with prints, is when you have nothing going on and you see that difficulty of trade burst of prints that come in, they hold so much more weight, because they did it when nothing was happening. Guys, is it easy to take a trade when there's hundreds and thousands of shares being traded? Of course it is, because everyone's trading it. So it's easy to, it's moving, it's doing. How easy is it to take a trade in a stock like ZM right now when absolutely nothing is happening? How easy is that trade? Anyone feel confident? Yeah, because guess what? You don't know what's going to happen, but the market maker does. So when we see those prints come out, they stand, they stand out so much more. So really, at the end of the day, we need to understand, and this is what it comes down to, and I'm going to speak to you specifically, Andy, because this is part of your question. But when I'm looking 90% of the time, I'm looking to see if big orders are coming out, because obviously I want to see that, but that's like maybe 5% of the time. Okay, and the 90% of the time that I'm looking at time and sales, I want to see things that stand out compared to everything else that they're showing us. Okay, everyone, hopefully everyone has blinds in their house or whatever. Has everyone seen blinds before? I'm pretty sure that the answer is going to be yes. What happens if I take one of the blinds and I crinkle it, I bend it? What do your eyes do every single time you look at the entire blinds? Where do your eyes go to? Yeah, it goes straight to the one that doesn't fit the pattern, goes right to the crinkle. And that's exactly what tape reading. When we're looking 90% of the time, guys, everything on this time and sales, this is a lot of numbers, right? So someone would say like, well, what is the guy at 143.42 going to do? 143.63 going to do? 143.59 and so on and so forth. But in reality, when we look at this, it means nothing. Guys, 143 at a major level. Is this a controlling print at 143? Hell no. Is this 141.66? No. 142, major level. No, it's nothing. Even though it's there, it doesn't mean anything, because guess what? That person, I'm not going to follow them. And what Day-Day's referring to, I call it the red dress. Anyone here, hopefully everyone's seen the Matrix before. And if you remember the original Matrix, he was in the simulator and everybody was in black and white. And then there was the one girl that passed by in the red dress. So when we're looking at time and sales, we're trying to find the red dress. Now there's, let's put it this way. There's different levels, there's different spectrums of the red dress. Now the red dress might just be, a cute red dress, long, but then, you have the crazy part, it's a red bikini. And the red bikini is what's going to show us this guy means business. This person knows exactly what they're doing. The red dress is still something we need to pay attention to, but it doesn't hold as much weight. And it goes back to the psychology of understanding who's behind the prints based off what the personality is. For prints, yeah, I'm excited, but I'm not jumping up and down. Okay, when I see 20 prints, guess what? Everything changes. within that. And this is how tape reading works, is understanding your controlling prints, but then what is the reaction to it? What are we seeing coming in? Guys, can a stock keep going down, okay, on a pull down if we don't get new selling? If we're not getting selling, if a stock is going to pull, let's start here. If a stock is going to pull down $5, is it possible that no one is going to short it for that $5? Is that possible? That not one person, no, it's not possible. First of all, there'd be a lot of people being fired. If a stock's going to move $5, people are going to make money on it. And that's what we call riders. So if you have ask prints that come and then it's pulling down from those ask prints, but you start to see that selling coming in, that's going to be shorter term selling to tell us the pullback has more room. Once that selling starts to die out, then we start to see the buying coming back in. Boom. Now we know it's time for it to go back up. And this is how tape reading works. It's just a puzzle. All right, guys, do we have any questions so far? Because now we're getting into the advanced things that I have 4 bullet points that we have to hit. I know we're already over an hour. Like I said, I will reschedule my meeting. I want to get these 4 questions done for Andy because he's been waiting for a week. But are we all good so far? Everyone starting to understand how this works? Or is everyone asleep? Aha, beautiful. All right, so what to look for when order coming to level major resistance or support? Okay, when an order is coming to a level, so when we say a level, it's a major level, 144. Does everybody remember the ask prints we saw at 144? Okay, good. So what we need, what to look for when we're coming into a level like this is number 1, volume. Okay, can a stock with no volume break past a resistance level? No trading volume, can a stock break past a resistance level? Of course it can. It's the market. Anything could happen, but the statistical chance of it happening is slim to none. It's unlikely. That's really what it comes down to. Percentages, it's a really crappy percentage. So what do we need? Obviously volume, and volume is always going to be the answer. You always need volume in order for a trade. But what we need is we need to start looking for what's called jackhammer prints. And I literally just made up this term in our last round of classes. But I want to start seeing some bigger buying that comes in right under the level to show me that this is starting to break down. Okay, can we all see that this is a pretty concrete resistance level right now? Coming up, it can't break it. Of course, it's a big resistance level. So you got to think of that resistance as a piece of concrete. Okay, concrete is you don't just go through concrete. You break your head if you try to jump through it. It's not going to happen. So what we need is what's called jackhammer prints to start taking little pieces out of it. Right now we have no buying, guys. There's nothing here. So we know we have the buying here, but in order to break it, we need to start seeing people come and start taking pieces out of it. Because if I have a slab of concrete and I start jackhammering it, what happens to the concrete? Concrete, obviously, very strong substance. What happens to it when you start jackhammering it? Gets weaker, starts to crack. Okay, it starts having points where it's not going to be able to get, it's going to be a lot easier to break through. See, now 143.90, we have basically one print coming in at a time. This is actually a big deal. It's not anything we're going to follow, but it is a big deal. So if we come up next time, we get 2 or 3 or 4 or 5, it shows us that the level is starting to get weaker. But look what just happened. No concrete jackhammer prints coming into it. Boom, stock falls down. It's going to be almost impossible to break unless we start seeing that buying. Now, keep in mind, this is one of the examples we gave before, is that a lot of the bigger executions that happen in the stock, are they going to be on greater than 1,000 or are they going to be in regular time and sales? A lot more of what we see, okay, the bigger executions. Because remember, if I want 1,000 shares, it could break it down into 10 100 share prints. But we don't see any of that. So the chances of this being able to break, even though there's buying here and there's buying at 145, right now, this is a crappy trade to take. And as we can see, falls back down. So if you would have got into that knowing we have buying at 144, you would have been screwed. So you want to see jackhammer prints when they're coming into resistance supports or any type of major level. All right. Next is what to look for when coming down to a level with buying or selling above. Now, this is an interesting one. So if it's coming down to 143.50, and this is actually, you know what, I'm going to use Roku. So if any of you guys, after you're done, I have a YouTube channel and I post my morning meetings like right before the morning opens, but we do a morning meeting at 9 a.m. every single morning. Okay. And what we want to see, so we had, if you remember this morning at the 7 o'clock, we had beautiful bid prints that came in at 107. Okay. And stock just pulled up all the way up here from that. Guys, was there any buying that happened as the stock was pulling up this morning? And once again, it's on recording. I did it at 9 a.m. So before the market even opened, you guys should definitely take a look. It's ahead of the charts, either ahead of the charts or ahead of the charts trading on YouTube. But you'll see the morning meeting and exactly. I even went back to it last to say this is my favorite trade. Okay, but no, there was no buying. So we have selling below and no buying as it's coming back up, guys. What's going to happen? What's going to happen at 107? Well, what's going to happen to the stock itself? But 107, the person needs to make money from that 107. And we're going to get an easy drop. This was the easiest trade ever in the morning. We knew about this before because it's just the puzzle made perfect sense. And that's what we have to take, the psychology behind what we saw. If a stock has no buying and it's going up, guys, what happens to the stock? Inevitably, without a shadow of a doubt, what's going to happen to the stock? Goes right back to where it came from. Right back to reality. And that's something that we need to understand when we're within our tape reading. So when it's coming down to a level without buying, it really has a lot to do with the situation before. Because if it was, we had that selling at 107, but all we got was buying as it came back up, we'd have to think about it differently. So that's a really more case-by-case scenario, but I'm going to tell you right now, black and white cookie cutter. If a stock is selling at the lows and no buying as it's moving up, stock's coming back down. That simple. Okay, knowing what to look for as, I can't read my handwriting. Knowing what to look for is, imperative. Just as important to know what to look for, and we talked about this before. So knowing what to look for, it's all based off print personality and the time of day and how the stock is trading. Right now, Roku is telling us it's not doing anything. So when we see this consistently happening, we can't do anything with it. But if we all of a sudden out of nowhere see 4 or 5 prints and a burst come out, guess what? That's going to have a huge difficulty of trade, and that means that's the person that we now want to follow. Ask, we're going to be expecting for a pull down and then come back up, and then on bid, we're going to expect a pull up and then come back down under. Making sense to everybody so far? Okay, so really knowing what to look for is all based off the print personality of the actual stock itself. Okay, and when it's, and this is just, when things are slow, difficulty of trade is what you should be looking for. Which point? Which point would you like me to repeat? That if we got big ass prints, stock should pull down and then go up, and then big bid prints, stock should go up and then go down to build. I'm pretty sure that was the spot from there. All right, but then when things are slow, what we're looking for, okay, first of all, number one thing, let's forget about tape reading, but number one thing, when things are slow, guys, we want to look at puzzles. We want to make sure that the stock has the range for that day and the volume. And this is a workshop for a different time, but puzzles, okay? If a stock moves $7.33 on average, okay, today volume is higher than average, and it's only moved $6. What does that tell us for Roku for the afternoon? What does that tell us for Roku for it's got range left, so we could actually expect this thing to move. So first we want to find that puzzle, and next we want to see something that jumps out at us. We want to see something that goes completely against what the actual print personality is going to be, and from there we can start to make decisions. At the end of the day, guys, can we trade without volume? No matter what, I don't care how good a trader, what methodology you use, what the hell you do, can you trade without volume? Nope. So if a stock is not trading at all, don't trade it. Look for something else. You get the best prints in the world. We'll give you a great story, but it's not going to move anywhere. So volume is always going to be a huge factor within that. And I think I am done. Yeah. Yes, that is our workshop. All right, so first, any questions? Now, obviously, I want to tell you all something right now is that if you don't, this is kind of like just scratching the surface. So I would not expect at all for you to go out there and just start tape reading. Because don't get me wrong, you will make some good trades, but it's going to be, so there are more things that go into this. There's a lot, there's a lot more to this methodology, but this is the kind of the intro to understanding how tape reading actually works. So what I'm going to do right now, I told you guys for 10 seconds, I wasn't going to sell you anything. I'm going to put into the chat real quick. So this is our trial. Okay, what I'm going to offer everybody is it's $1 for 5 trading days. Okay, coupon code is risk-free. So all you have to do is you go right here. Okay, you go to that link. You'll see a coupon code right here. Put that in. It will make it for $1 for 5 trading days. That's as much as I'm going to sell you. I could honestly care less what you do. This was just to give you guys content and really show you that since 1792, things have been being done the same exact way. Yeah, at this point, I could read more from masking tape. Well, first of all, I mean, not for nothing, but controlling prints at a level on the ask, you'll be able to get some nice trades going down and then from a trigger back up. But once again, this is all content. Tape reading is something, it's almost like someone that studies the Bible. You're never done. There's never being done with it. Tape reading is constantly learning, and there's a billion other things. But guess what? We'll do more workshop. This is just a 101. I can only do so much in an hour, FJ. And I tried to do as much as possible. All right, guys, any questions? Any questions on anything? An author? Oh, okay. So obviously trading in the zone, and I'll write it down, is the best. If you're gonna ever trade, you need to read that book, Trading in the Zone. That's going to be a big one. But once again, we have a huge list that's in the chat room, guys. It's $1. If you're not interested in tape reading, please don't buy it, because then you're going to get nothing. Well, you might get some life stuff out of the room, but you're not going to get much. But if you are looking, guys, it's $1. If you're not willing to invest $1 into your future, don't know what to tell you. But we do have a big list of books. Everyone puts different passages and stuff in there. I just off the top of my head, but Trading in the Zone, absolutely 100% is something that you should be the first book that any trader, you should, in order to actually open up a brokerage account, you should have to take a test on Trading in the Zone. All right, guys. Well, it's been an absolute pleasure. I am Rich Lepis. I look to forward to speaking to some of you soon. We'll be sending out the recording to anybody that would like it. I will talk to everyone else in the chat, and happy trading.